China moved its yuan midpoint to 6.8628, and that small change gives currency desks a clear pressure signal. The move was only 20 pips above the prior fix, but the tension is whether Beijing is allowing gradual yuan softness without inviting panic. For viewers tracking PBOC Sets USD, the useful read is the pressure point, not a broad market mood. The confirmed headline centers on PBOC and 6.8628, while the first practical question is what it changes for FX desks. The second number to keep nearby is 20 pips, because it shows the scale or timing that makes this story more than a label. That keeps the opening simple. The event is real, the consequence is specific, and the next step depends on the evidence that follows. The daily midpoint guides how the yuan trades before Shanghai opens, with the exchange rate allowed to move inside a managed 2% band. The midpoint moved from 6.8608 to 6.8628. Recent fixes stayed near a tight 6.85 to 6.87 range. This context matters because the story is not floating on rumor alone. It has a clear status, a known actor, and a measurable anchor. The second confirmed piece is how the event connects to USD CNY and exporters, which narrows the story from general crypto noise to a concrete market or user effect. The card-level baseline uses 2% band as the supporting signal, but the script treats that number only as far as the evidence allows. Nothing in this baseline should be stretched beyond the stated facts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A higher dollar-yuan midpoint lets the currency weaken in a controlled way while still giving banks, exporters, and importers a visible anchor. In plain English, the midpoint gives banks a daily trading anchor. A higher fix weakens the yuan without a sudden break. That mechanism is why PBOC Sets USD is more than a headline. It tells viewers where the pressure travels, through access, liquidity, policy, user trust, custody, or settlement depending on the story. The mechanism also explains why rate signal and trade band matter more than a broad price reaction. If yuan changes position, or if daily fix appears, the mechanism gets a clearer stress test. FX desks, supply chain teams, commodity traders, and companies invoicing with China all feel the signal because hedges and pricing decisions depend on the fixing path. Exporters gain a pricing cushion from a softer yuan. Import-heavy firms face higher local currency costs. The affected side is therefore not every crypto holder in the same way. It is the group closest to PBOC, the product or market connected to USD CNY, and the users who must act on the changed condition. For FX desks, the practical concern is tied to 6.8628. For exporters, the pressure usually appears through access, cost, timing, or confidence. That is why the practical consequence matters more than a generic bullish or bearish label. The fix does not prove a sharp devaluation plan. The open question is whether the rate stays in its recent narrow range or keeps drifting higher. The move does not prove a hard devaluation path. A run towards 6.9 would confirm stronger pressure. This scene is the guardrail against turning an incomplete story into a prediction. The confirmed part is the event and the supporting facts. The unresolved part is the follow-through, whether the response, approval, recovery, liquidity, policy step, or user behavior actually appears. The open item is best summarized as drift risk, and it should stay separate from daily fix until a fresh confirmation point appears. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is the following daily fix, plus Federal Reserve tone and Chinese growth data that could change dollar pressure. The next daily fix shows whether drift continues. Fed signals and China data can shift the dollar side. For PBOC Sets USD, the clean close is to track the signal that can change the story rather than guessing the final outcome. The path from fix to Fed cues is the simplest way to follow the next phase without adding unsupported claims. If that signal arrives, the market or user effect becomes easier to judge. If it does not, the story remains constrained by the current confirmed evidence.